Hello and welcome to ATFX's Bank of England preview. Right, the major central bank decision of the week this week. We had a plethora of them last week, and following hot on the heels, the Bank of England comes into play this week. Once again, we're talking about central banks, but we can't go by without looking at what's really moving the markets harder than even the underlying fundamentals, which are moving interest rates and the interest rate differentiations. We do have those tariff considerations that have come in and hit the market, and overnight we've seen 1.3% moves in the dollar across the board against the basket of currencies. Cable's obviously one of those currencies that's moved very, very hard in line with that, and you can see here. I'll move you over to our charts in a minute. We've seen big figure moves, basically. So we have to take that into consideration when we're looking at trading opportunities that come in line with the Bank of England. But focusing on the Bank of England, we are fully expecting a rate cut from the MPC this week. That we're anticipating the move of 25 basis points down. Fair value or neutral rate for a lot of markets. I was looking at some of the big banks calls. Over 50%, 57% of the market feel that fair rate for the Bank of England moving forward is somewhere between 3 and 3.5%. We're sitting up above 4% at the moment. So there's a few rates coming if we believe everything and we see what the economists are saying. So rate cuts to come for sterling. That should normally lead to a weakening in sterling, both against the dollar and on the crosses. And we're going to look at that in some detail for trading opportunities as we move forward. So I'll just skip over to my sterling page now, and we'll have a look at where we can start looking at some decent trading opportunities on the Bank of England, and indeed after we hear from the Bank of England on what they've got to say. So here we are. This is on my sterling page, and we've got all the usual suspects in here. We've got cable both on a daily chart and an hourly chart, and we've got 3 different sterling crosses. And then, you know, if we need to look at some of the other sterling crosses, we'll go into a little bit more detail. So I'll just bring us in because we do have to see what's going on close in the market at the moment. This is cable. As you can see, we dipped all the way down to like 122. Under 122.50 overnight, and we've accelerated hard all the way above 124. So massive moves, and that's been across the market, and that is because of what moves we've seen in the dollar on the back of President Trump's update over the weekend that we would see tariffs coming in on Mexico and on Canada and on China. This saw this sharp move on the Monday open. We've then retraced this move plus some up to these similar levels that we start. And the great thing about this is we can see from this chart that we have topped out very close to that trend line resistance level. That is something that a lot of traders will be looking at, both in the retail space and the institutional space. It gives us a point of entry. Either we're going to be selling against it if we're bears, or buying against and looking to buy the break if we're bulls and for moves out. Now a lot of that will depend on the dollar move, but we're going to focus on what we get from sterling. So anticipated rate cut of 25%. What we always look for with the MPC, the Bank of England, is the vote count. So how many people voted to hold, how many people voted to cut, and how many people voted to hike. Not many people going for a hike at the moment, but it gives an indication on where those MPC members are thinking. And that's what can drastically change and move markets very quickly. So keep an eye on that as we move forward as well. I'll take us out of this chart and I'll show you a similar pattern. This is on the longer daily term chart, and it shows up even better, that resistance trend line. Look how it hits in there really nicely, like 4, 5, 6 times. It's a really good trend line to trade off of. Longer term traders will be using this. We are still in a downtrend for sterling, and the reason we're getting these cuts is that, you know, there's a big feeling from job numbers in the UK that unemployment is going to move higher. But as with always, there's 2 sides of the argument. Positives for sterling include the fact that Trump is not going after them in tariffs so far. He said the relationship is still good. He feels there's a little bit of tweaking that could be done on trade between the US and UK, but certainly not going as hard at the UK, or anywhere near as hard as he has at Mexico, Canada, China, and the EU to a certain extent. And we'll look at the EU side of the equation in a bit. That's a positive for sterling. Now, also, if we see a pullback on these tariffs, it's a negative for US. So If we do get from the Bank of England a cut, but we're going to wait and see how things move, we could see a sharp move through this resistance level. It would take us up probably through these levels and up to challenge 126, and then the next the next major level on the daily charts is all the way up here at 127.89. That's the 200-day moving average, and then all the way back up towards 132. Don't get me wrong, I think 132 is probably a little bit pie in the sky at the moment, but you never know, especially in these markets. So let's have a quick look on the crosses, because the good thing about the crosses is it takes out that dollar equation, and it probably gives us a smoother and better trading platform for the Bank of England. Rate cuts, if we're going to see a more dovish MPC, if we're going to see a more dovish Bank of England, then we're probably going to see the sterling retreat. This is, and I'm going to bring this in, this is where we've got these lines from. So all the way back to 2015, this is the daily chart. Nice trend line coming in here, support now around 82.38. And this is the top side trend line, resistance coming in now around, let's have a little look, came off of there not too long ago during this month, 84.75. I'm going to bring this chart in so we get a better detailed look of where we're going. We're back down here. Now, the reason we've seen this is sterling has appreciated against the euro. Euro is under pressure for a number of reasons. They're probably going to be looking to cut rates a little bit faster than the UK. And as I said, we've got some positive news on the UK side of things, and the Bank of England will factor this in. So where we're talking about this tariff impact, because the Bank of England will take it into account in the message they give it to the market in forward guidance. That could be sterling strength. And you may see the sterling strength a better trade on the euro sterling or on some of the other crosses, which we'll look at in a moment. Euro sterling down here, we are mid-range. Support coming in, as I said before, 82.37. You probably wouldn't look to trade this until we're hitting those lows around 82.20, 82.19 looks like the road. But for those looking for sterling strength and maybe against the euro, a break trade down here could open the way into fresh ranges. Alternatively, those looking for sterling to depreciate on the crosses and against the euro may be looking to pick them up around about 82.40 for a move back up to challenge those 84.40 levels. So that's euro sterling. Keep an eye on that. Sterling yen, another great trade, moves hard, as we all know. Daily charts again, decent charts coming in. Good resistance trend line coming in here. Look, 1, 2, 3 levels there, plus this 200-day moving average is not too far away from the resistance trend line. Support coming in a little bit lower underneath 180. So we are mid-range here, but mid-range does give you the propensity for moves off the bank of central bank call. Once again, we get that 25 basis point cut. We're probably not going to see too much. What we're going to see moves of is the indications that we get from the bank, whether they're going to be looking to cut harder, whether they're worried about that job situation, whether they're a little bit happier around the trade situation. Trade has got better as well against the European community, which is why we've seen that euro sterling go down. So there's some certain positive sterling numbers out there, and that's what we could see in forward guidance from Andrew Bailey and the rest of the Bank of England MPC. There's your sterling yen, looking good. Now, sterling Aussie, one close to my heart because obviously formerly from the UK but living in Australia now. Still got a little bit of risk on this one. It's capped out a couple of times just above 2. So 202, nearly 203 there. Capped out again. 2 is a bit of a psychological number as we're trading around it now. Could be really good. And especially, I think, if you want to take advantage of sterling strength, not affected so much by the US tariffs, whereas the Aussie, good proxy trade for China, could see that pull back. So a lot of people looking to see we may get a pop to the top side. We're going to be looking to buy the break here, 202.40. You're probably going to wait to that 203 level. It could take us higher. And as you can see from this chart, it's a long way, a long time, 2020 till we're around about that 207 level. And look how far we got low. So can see big moves on these crosses. So that's where we are on this Bank of England rate decision. So the entire market is locking in this 25 basis point cut. What we see on top of this is the forward guidance we're going to get from the MPC. If it's slightly more positive, look to buy sterling. The dollar trade's going to be harder, but still going to be able to make your money. But you probably trade that on a more shorter term basis. Look to take profit fairly quickly. Look to trail stops. The trends I feel now, and most of the market feeling this way, is you're probably going to look to try and enter sterling trades on the crosses. It takes that dollar side out of the equation, which is being heavily affected by geopolitics, the new entrant in the White House, and tariffs. So I think you're going to be looking cable, short-term hard trades, and there are some good levels. We've picked out good levels, so you can get stuck on those. You may want to cross those positions out into one of the other currencies, one of the other major currencies that will give you that better long-term trend trade. So good luck trading out there. If you need anything from us at ATFX, please let us know. And keep an eye on see what the Bank of England does in a couple of days' time. Thank you.